The Treasury Department will cut its stock ownership of AIG by more than half in an $18 billion public offering. In Europe, France announced new austerity measures while parts of Greece's austerity plans were rejected by international inspectors. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with The Street. Together we bring you the morning call. This week, all eyes are going to be on the Fed and Germany. Most people are expecting to hear the Fed announce a new stimulus program. Scott, it's going to be another big week here. What are you expecting?
Well, I'm not expecting a week like last week. Last week we also had a lot of big obstacles. We had to go through the ECB. We had to go through a lot of announcements. And meanwhile, markets broke out. If you take a quick look at the chart of the SPX, you will see, this cup and handle type pattern that we've been talking about, this, uptrend or ascending channel that's been intact, finally got some upside breakouts, some momentum. This tight range that's been intact since mid-August broke out with intensity. You saw us break above this 1413, 1415 level we were talking about for some power. And then even on Friday, with a pretty dismal jobs number, we were able to tack on some gains for some follow through. So all in all, market's been acting very healthy.
Yeah, and I think we've seen the leaders lead, and even some of the laggards came in and showed a little bit of strength. So in the sector spotlight, let's take a look at some of the sectors that did better. We'll start with the Qs. That's the tech sector. They hit a 12-year high last week. They're kind of extended, though, from the 8 and 21 day. Do you think we'll see a pullback to that or some consolidation before we see see more momentum in the stock?
I think we're going to see some digestion, and digestion's healthy. You're not always going to get big moves like we saw last week, but the important factor here with the Qs and technology is that Qs is part of the leading group. That means technology, which is where you have some growth, is where people are putting their money, so that's showing you that this can continue. The other important part is that we're now at 12-year highs. That means, if you've had a long-term plan, you've been able to make a lot of money in the market if you stayed with it, besides having an intermediate trading plan or even an active approach. If you look here at the chart of the Qs, you will see lots of different patterns here. Okay, as I just said, as an intermediate trend trader, this trend that was put in place, or the low that was put back in here, has never been violated. As a trader, this was your spot to add as it broke above this mini downtrend. Then you had a little flag type pattern holding higher, showing you some strength in the Qs. Then you had another push up. And then from here, after a big move from this move down there, you had to see some consolidation. So finally, you saw some nice consolidation. You had this breakout on Thursday, nice little tight action there on Friday. Overall, I think that as long as the Qs hold, just this previous breakout, like you could see some digestion action to here and flag again, you're going to see higher prices, and technology has been the place to be.
The home builders have also had a great run this year. It's been a pretty impressive group. The last week they ignited a new high for the year. What are you watching in this group?
I'm just trying to keep people long. A lot of people have been long the home builders. We had a segment with Jim Cramer first quarter talking about the potent strength we saw in the home builders. That what does this mean? What is it leading to? Is it leading to a housing recovery? Is it leading to a better economy? Or is it just a trade? And at that point we're like, what? I think it can continue. Now, if you look here at the chart of the XHB, this also gives you a lot of nice patterns here. This was one of the most recent when it broke above this area. Then you had a push, consolidation, another wide range bar, and ever since then, just following the 8 day to the highs here. You look at stocks like Lennar, on the move, lots of tradable patterns to the upside. You look at let's see XHB, what's that doing? Similar thing. And then you have some laggards in that group, just say like a toll, which actually isn't even a laggard, that's been doing well too. So right there, a lot of home building stocks, different than tech because it did get a lot more battered and bruised in the I'd say in the last 5 years. But this year, if you follow the money and you saw it ignite in the beginning of the first quarter, you were able to put money there and then trail it and trade it the rest of the year.
The ags last week got a nice move on Thursday and Friday. It's kind of pushing into some area of a resistance. So is it going to be able to move beyond that?
It's certainly trying, and we talked about some of the strength that rotated back in there midweek. We saw CF perk up, I saw Mosaic perk up, Monsanto's been a leader. As far as the group overall, this was a lagging group coming into the second quarter, and Jill pounding the pavement that this is a third quarter story, showing you that you didn't have to be there in the first half of the year, but then once you saw this ignite, you go to the chart of the MOO, the MOO, right here is when we started getting more constructive on it. You had your reversal right there, your gap up, and what did it do? It never filled this gap. It showed some potential here. Okay, and then since then, you had like another gap up. It went sideways for a long time, but overall, it is acting well. It's still a laggard group, not leading, so you have to be very selective on the names you choose. But right after this gap up, it came back in vogue, and then you saw your stocks like CF, on the move. Look at the day that we saw some money come back in. Nice 2 days thereafter. Monsanto, also looking pretty good near the highs, and then even like the lower level tier names that are turning into high quality names like Mosaic. Talked about that spot. I think we were just getting close to the 65, 70, but this was your reversal. Here was your commitment to it. Big move to resistance, digested, and then pow. So you're seeing a lot of action in a lot of different groups. You just have to know what's your time frame there.
The retail group has been a strong group this year. It's been on a macro uptrend since May. Last Friday, it did pull back a little bit when the market was up. Do you think we'll see more of a pullback in this group, or can it continue higher?
I just think it got a little extended. It was extended from the 8-day. It's been a leading group all year long. Every time we check the temperature, RTHs have been in there, and a lot of the big box retails have been there. A lot of some of the higher end ones also came back to join the party. You saw LULU with an impressive report after some corrective activity. Under Armour was at highs. So overall, you take a look at the RTHs and you'll see, here's this gradual little uptrend, and then it started to accelerate on August 3rd, and it stayed with the 8-day. And as long as it stays with the 8-day, stay with it. Look at some of these charts. You look at Target. A little choppy up here, but methodically has been making its way higher. Walmart, even after that bad report, kind of gapped down, consolidated, went back to the highs. This was the area that we spoke about it to buy it from 62 as a stock of the year. Under Armour, new issue that came out, years back, been a quality name for investors that look for this type of thing at the highs. So again, depending on your time frame, there's just a lot going on here. And at this particular point, you don't want to chase things, but you don't want to fight them. And I think the more of the real money is being made on the long side, not in the cute shorts for a little bit of a digestion slash down trade.
No, the XLF, the financials, they were a laggard group, but last week they saw some nice momentum. Can that momentum continue into this week, or do we get some digestion in this group?
I'm thinking digestion again. In August, when Bloomberg talked about the financials, the fourth quarter move, gave a call spread, said buy the $8 December calls, sell the 10s, cost you X and it could make you double or triple. I think those guys are very happy. We started talking about Goldman Sachs. Last week around Wednesday, it showed crazy relative strength. Goldman Sachs took that and went. Look at that move. It started on this day, and then here's your follow through. I thought it would stop right around here. Just kept going, looking great. Then we started targeting JP Morgan right around here on this breakout above 37.40. And if you look, that was a nice entry, showing you that this was your reversal. Here's where it showed another strong commitment. Broke this, and then pow. So you've seen just a lot of really good action for investors who just sit around, and for traders that use a tier system in order to maximize chart patterns, like you saw when this traded above 37.45. Great 2-day trade.
Let's take a quick commercial break, and we'll come back and talk about a couple more banks too.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to start off in the trenches with Goldman Sachs. I know you already mentioned it briefly. We were looking at it last Wednesday. Now this has had a nice little run. Do you take a profit in this one here?
I actually bought it on the breakout and sold it a little early, and then I started fighting it a little bit last week, trying to be short, because I was just like, you know what, it's had a big move. Played it so many times long since the lows, and after 2 big up days, let me just try and be a little cute on the short side, because I have a lot of longs, and it really didn't pull down. So I'm still short Goldman Sachs, but it's just a cute trade. But you have to be careful with these cute trades, because it can make you really ugly. You look here at the chart of Goldman Sachs. This was, the strong support that wound up holding. Here is that potent move to say, you know what, this might be it. It could be, back in business. Came back, pulled back, held higher. Then it was very, very choppy. Then finally, once the market got the green light, this was the 2 days I think we were trying to trade along. Somewhere in this day, I started getting short. I'm still short it. I'm going to trade around it. I don't have that much size. I was just trying to be cute and this is what I'm going to look for today. 116.75 is the high. So if we see some type of red dog reversal where it pushes through and creates some kind of topping tail, then maybe we get a little push down. Look how far it is from the 8, the 21, the 50. So for me, I didn't start shorting it here or here. I feel like starting to short it around there. I could stick with it, and I'll short some more on strength and just try and salvage the trade. But the better the trade will be, I do think, is if it pulls in and it could be buyable somewhere around this, maybe 110 if we get that.
Citigroup is up 18% since the end of July. This one had a nice run last week too. So what do you do here?
Same mantra here. Like we said, you don't have to be in every one of them.
Yep.
You pick one or two. Not everyone that I was talking to would pick Citigroup, but there was people talking about it on that Wednesday, Thursday, because remember we talked about that small wedge formation. I'm like, wow, I'm probably going to go with JP Morgan, Goldman, maybe Bank of America, but Citigroup looks good, but it can't be in everything. You look at Citigroup right here, this was the last consolidation, this last nice tight pattern. So when JP Morgan broke out above 37.45, this one had its own little, breakout party for itself. So nice 2-day move, extended a little bit, big move off the lows. Stay with this if you're long, but at this point I wouldn't be chasing it as, it just needs some more time, just like everything else.
Morgan Stanley, a laggard of the group, is now trading above all of its key moving averages. Do you think we'll see more follow through in this one?
This one, definitely squeezed a lot of people that stayed short that one. This one was one of the weakest ones out of for a while. So this kind of shows you two different things. One, if you're like an investor in something longer term, and like just say you've been sitting in Wells Fargo, you haven't had to take any pain. So you just go real quickly to Wells Fargo. Wells Fargo, broke out at highs of the year, but in the last, just say, 2 weeks, percentage-wise or performance-wise, this didn't do great, but it didn't matter because it's at highs and you're doing all right. As far as Morgan Stanley, where if you look where Morgan Stanley was at some point this year, it's been battered and bruised, but in the last 2 weeks, if you were here, there was a much bigger alpha for you or a much bigger return. So if you understand the dynamics of what's going on, when banks are heavily shorted or anything's heavily shorted, you could look for these trades that could become explosive and become really great, intermediate trades, but not obviously as good of as an investment as you saw like with a Wells Fargo. But sometimes, it all depends what you're doing. So at this point, this was your last breakout. It definitely extended higher than people would have thought. I said you can get there to what, 17 this year, and it's already there, and there's still 3 to 4 months to go. I would say, you have a gap up here at 19 to get filled, so at some point maybe you have to raise targets. I wouldn't be chasing it here, but there is some room to fill that gap up to $19 if this rally stays intact, and I think it will. I think again, 1450 to 1470 could be conservative for the end of the year, and if that's the case, Morgan Stanley could see 19 bucks.
And AIG was one of the financials that was weaker last week. Today, the week came out, we heard the Treasury is going to sell $18 billion of their portion of stock there that they own. But the investors were disappointed last week when the company announced a buyback of only $5 billion. So they'll only be buying back $5 billion of that. I think people were looking for more like $9 billion. It's one that Stephanie Link owns and will probably be buying on the weakness.
Right, if they're doing this, so someone's taking those shares. So
Yeah.
looking at the chart, you look at support. Let me just show you what support is, because you talked about a lot of billions.
Yeah.
It could be over my head. So at this point, you go here, 33.35. If you are long this thing, you will have no pain if it holds this 33.35. It'll hold support, and then it can continue because, again, it's out of the way. If it's not supported well and it's not a great deal, maybe it does come down to the 50-day and test 32.49. So here's support 1, support 2, and just know, what you're looking to get out of it.
Let's do some quick hits. We'll start with Apple. Wednesday's the big day. They're going to announce their new iPhone 5. Everyone's really excited to see what that's going to be like. Will this event help them get closer to 700, or do you think we could see a pullback before we get to 700?
At this point, it's been acting very well, and I don't see any huge pullback in its horizon. I know that they typically sell events in Apple, they sell news, or at least they try to. Okay, but we're in a different market right now. They tried doing that last week with Amazon. They couldn't, and Amazon exploded. So right now, the question is for traders, will it get a move to just say 690, 700, before Wednesday? Or will it have to wait till Wednesday to get some momentum? Because lately, the last few days, there hasn't been that much momentum in Apple, but it's been trickling to new highs. You look here, I'm still long Apple. You look at the chart. This was a lot of different types of ways to play it. This was your quick move up. This is when a lot of guys like me got in for a swing trade. Then it broke above recent resistance, held higher. Then there was another nice trade through this 644. And now, after wedging once again, it did close at the highs. Okay, it closed above this 680.87, but really on Friday there was no momentum there, no like big breakout like we saw with Google above 700 and some others, because you still have this event you have to get through. So at this point, I think the way I'm going to trade it is I want to see the action. I'm going to try and stay long it. It's still following the 8-day, and then if it can get above Friday's high of 682.48 with some type of burst, maybe you see a nice wide range bar, something like this Amazon real quick, where finally the shorts just got so torched after this being your 230 buy price, your 238 buy price. It was choppy, and then they couldn't sell the event, and now pow, look, shorts just said, oh my goodness, I'm done here. They're cooked, and investors have made a lot of money. Look where Amazon is. It's an oldie, and it's boom. Okay, you can make money in the stock market as a stock picker.
Let's look at Google, because that one had an awesome move last week too. Can they continue the momentum?
I think Google needs a rest, but it also became such a great trading vehicle since earnings. Yeah. After earnings, there was up. We talked about buying it at 620, 645. The day the Apple news came out, I'm like, I think 660 is a buying opportunity. If you waited, you could have bought 672. Then it broke above 687. So you just look here at this. This is almost like stock trading 101. Okay, and I could dissect this another time. It'll take me a half an hour. But for this point, last tradable breakout was right above this flag, 688.99. 2 powerful days. The high here was what, 712. I think it's going to digest this move. There's a difference between something digesting and trying to be short it. At this point, if you want to try and make some cute money short, be my guest, because it could come back to retest, this area or this area. But at this point, I think the real money is still long this thing. And at some point, I've been talking about this all year long, that the historic high of 747 gets taken out. I wasn't sure if it would be by Christmas, but it's looking like it might be.
Lululemon popped on Friday, up 12% after beat earnings estimates, and it raised its guidance. Can you get involved in this stock here?
This one, I don't think here. We talked about the reversal on it way back when. It went over on StockTwits. You look at the chart real quickly. You go to Lulu. This was the reversal right there. That was when swing traders said, I'm going to try and get back in, or when it broke this downtrend, or when it flagged. On this extension day where every short in the world got squeezed, I don't, it can go higher, but to just initiate a new position here, I just don't think it's prudent. What you want to do almost here is you take your retracement rules and you go, from the low here to this high, and then figure out what spot you might want to buy it back if you wanted to buy Lulu, and the 25% retracement comes in right around the 71.43. So, I would say a little bit close. I don't think it actually gets down there. I would say, go more to this bar. Somewhere around 75-ish would be a better spot to try and buy it back. But your pivot is 77.60. So it gets through 77.60. The only thing you have in its way is the previous high here of 81.09.
Okay, how about Nike? This one has had a good run over the last couple of months too. Stephanie Lincoln, Action Alerts Plus, owns this one, but she's more of a buyer in the low 90s.
Yeah, I would agree. I think this is still trying to prove itself. It's just bouncing back. It's a quality name. People look for something to buy. The earnings here weren't great. It's come off a lot. It's had a very choppy year. So to chase it up here, you look. But like you saw, Lulu came back, and then it came back with a vengeance. Nike had this big gap down. We talked about, it potentially showing some type of formation to make money. Here was that doji, and then this is really when, it started to get to fill that gap. And now I think it's okay. My traders aren't really watching it. It's more for, I guess, value people.
Molly Corp is a really bruised and battered stock. But could there be a cute trade in this one? Because, it's above its 8 and its 21 day.
This is just this is what I call, one man's trash could be another one's treasure. Because if you held this thing through the last year or two, you've been trashed. For me, I haven't been involved. I'm looking to see if there's other type trades out there. So I got involved on Friday because I like the lower tier setup. I know that the metals just had a big move. This one is heavily shorted. I like this little tight pattern. So if you look here at the chart, you will see, this whoever owns it from here all the way down, it's their trash. You look at this small little, lower level consolidation that's tight. could be your treasure. It's not your problem. You didn't own it the whole way. So that's the way I look at it. So for me, I nibbled a little bit, in the 1170 area or 1160 area. You have a nice little flag type pattern here. I will add to this if it could start getting above 1254. Above 1254, I think that you get a nice move to perhaps fill a big portion of this gap, and 15 would not be so unattainable. So from 12 to 15 as a lower level laggard play, it's worth a look for some cash flow.
You want to do a quick look at Michael Kors?
Let's take a quick look because this IPO has been unbelievable.
Yeah.
Great new company, great investment vehicle. I know they announced a secondary. That's the problem with some new issues. Within the first few years, they want to get rid of some insider stock. So at this point, I'd say as long as it holds above, just say 52, the momentum will stay. It's had a really big move. Remember the gap we talked about, how to play a gap, never filled it. Here is your entry in, another nice bull flag. And then unfortunately, some guys or some traders that may have been in here, up here, that, they're going to have to take a little bit of pain. So I would just say watch this lower level right here. This is like what, 53-ish. As long as this holds, I think it's going to be set up. And overall, I think the company's doing very well. Investors are trusting it. And sometimes secondary short-term are painful, but long-term are better because it puts stock in, in clean hands.
Yeah, exactly. Well, that's all we have time for today. Those are the stocks we're looking at, the levels on the S&P we're watching, and some of the sectors we're keeping our eye on. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.